So good morning, everyone. Join us once again for our weekly broadcast. It's Thursday once again. It's 10 a.m. once again. We're delighted you're able to join us either live as we do this, or for those who are watching the recording on YouTube. Welcome, whatever time of the day or night you happen to be listening in. So let me first of all welcome all our guests today. So Wendy, Keith, and Antoine, delighted to have you. Hope you enjoy your time here.
Hi, everyone. Thanks for having me, David.
Yeah, excited to be here.
Yeah, hi. It's good to be here today.
Fantastic. Thank you very much indeed. So let's get straight in. So if there does happen to be any new people joining us, this is a weekly, around about 30-minute broadcast that we do. It's co-hosted with myself, David Johnson. I'm the CEO of Leo Crowdfunding. We're an equity property crowdfunding platform, and I always let my co-host introduce himself. So over to you, John.
John Corey, Property Fortress, long-term investor, buy and hold investor, US, UK, Hawaii to Bradford, and actually also an active property investor when it comes to crowdfunding, investing in other people's deals, sort of the older silver hair type investment strategy.
The silver hair seems to get a mention on a regular basis, John. I think you're proud of it. It shows your experience and your journey.
I want to beat you to it. You normally bring it up, so I thought I'll grab it today.
That's exactly it. Very wise, very wise. So this, for those that are regular attendees, we do this really to cover any market update that's relevant to the property market and crowdfunding. We always have special guests on or discuss a special topic that's relevant. We sometimes focus on some projects that are on our platform, but what we're trying to do is just give some educational tips, just some a wee tidbit, or the old golden nugget is the term that's often used, just something that can help people, whether they're developers, whether they're investors. It just gives them a bit of value for having tuned in and spent some time with us. Now, market update this week, I think, is a rather obvious one because on Monday, the FCA policy statement came out following a consultation that they had done last year. So this is PS 2022 number 10. John, you're one of the people that enjoy keeping an eye on what the FCA are doing. I believe you're one of the people who actually contributed to the consultancy and took time to actually make your points to them as someone who's in the market. So do you want to maybe briefly, first of all, explain what is like a policy statement from the FCA and why is this one so significant to any developers who are wanting to raise funds?
So policy statements in general are when the FCA sets out their new or updated rules, requirements. It's essentially them announcing, here's a new regulation. And in this one in particular, they're targeting high-risk investments, as it says in the headline, and also the firms that might approve offers, fundraising documents and things like that. They definitely are targeting the property sector. This is off the back of a prior policy statement, and effectively you can pretty much classify any property development, any situation where you're raising money to add value, it's a high-risk investment. And if you're going to raise money from anyone other than an institution, then this directly applies to you. There's warnings that have to go into the document about the investor being able to lose 100% of their money. They're very explicit about the words you have to use in your documents, things like that. So if you enjoy reading this sort of thing, well, you can definitely download it and read it. Just came out August 1st. If you would rather focus on making money through property, I would suggest you outsource compliance to an authorized firm, one that is appropriate for doing or running compliance exercises and understands what this document means.
Okay, and for those who maybe were aware of, sort of PS 13 and then right through to the 2020 policy statement, then the consultations, are there any significant changes in this? Does this make anything significantly different if you're a developer looking to raise funds than, say, the market a year ago?
So I would say that anyone who tries to comply with PS 13.3 is basically out of date, and that you should just stop. It's an inappropriate starting point. And then the document that was released in December 2020 includes loans. So it used to be under some interpretations of PS 13.3 that if you were just doing loans, you were fine. Well, I would say that's changed. And this current policy statement 2210 only solidifies that loans are clearly included. Raising money privately with loans is now within the net, within the boundaries, within the regulations. So anybody who thinks they're complying with PS 13.3 and only looking at high net worth or sophisticated investors, well, that's bogus now. If that's your boundary condition, well, then you're in the minefield, you just don't know it.
Okay, yeah, very, very well put. And I'm sure some of our guests may have some comments on this when we get to the discussion about developing and investing when we do that. So listen, thank you for that. So definitely encourage anyone who, if you're a developer, you're looking to raise funds, but even as an investor, it's worth being aware of this so that you are aware if people make a financial inducement to you or try and give you financial advice or are not giving appropriate risk warnings, then you're aware of how they should be approaching you and you'll be able to judge sort of who's a cowboy and who's wanting to play by the rules. So we always do this before we go to our guests, and that's we try and put John on the spot to sort of tap him for some knowledge and experience that he's had in the past, and just give a bit of advice. People throw in questions. This one, John, is probably a good one, actually. What has been the worst property deal you've been involved in? Maybe you lost money or there was just loads of complications that you didn't foresee. So can you give us an example?
Well, I think it's funny that you say this one's a good one. All the others have been good too. So in particular, right now, I would say any investment I've made, and there's a few of them, that involves cladding. It may be a temporary problem, or it may be a long-term problem, or it may be something in between, but it's been painful and financially painful to deal with the cladding issues. So UK building standards were inappropriate, materials were used that were inappropriate, maybe construction techniques were inappropriate, and 10% of UK housing somehow is impacted, which means that I have units that you really can't sell right now, that they need to be retrofitted, whether that's going to be on me, on the developer that originally built them, or on the government, and therefore all the taxpayers. But yeah, this whole cladding sort of mess has been an interesting one. The properties are still, I think, good assets. It's just they can't be sold. They can't be easily refinanced because the lenders and the buyers don't know what they're looking at, because they can't figure out what is the damage or what is going to be the eventual cost and who's going to have to put their hand in their pocket.
Mm-hmm. Cladding's actually an interesting one because, you don't know what you don't know, and nobody probably could have foresaw sort of the outworkings of using that material. It just seemed standard at the time. It's what everybody did. Nobody raised any concerns. There's then an incident, and then all of a sudden it's like retrospectively people feel that other things should have been done, or what are the future solutions. But yeah, certainly a lot of people have been left with problems from that. So thank you for that. That's brilliant. So our next project that will be on the platform is the Duke Street in Brighton. It's currently coming soon. It's just gone through its final checks before we then go to view deal. For those that are familiar with the platform, Duke Street is from a JV from Target 5 and CC Investments, Rachel Hillier, and they originally raised 169,000. You can see there from 38 investors to refurb a mixed-use building and very central location in Brighton, and that has now been complete. We did a site visit there a few weeks ago, and that property is now being let. So they're going to do a second raise, which is effectively allowing investors to share on the income of the rental. So while the first one was development refurb, this next project is to allow investors to share in the rental. So effectively, investors have the chance to buy yield is what that is. So that's coming soon. Keep an eye out for that. And there'll be a project webinar and obviously an equity offer document you'll be able to get from the platform. So let's get into this week's topic. Really looking forward to this. Growing wealth, a bit of a discussion between is it better to grow wealth through being the developer and doing the projects yourself, or is it better to grow wealth by investing in others? So that's kind of the debate, and delighted today to be joined by three people. So I'll let them all take a minute each and give their sort of brief background in property and even before property if they want. So we'll go as per the screen. So we'll go Wendy, Antoine, and Keith. So, and if anyone has any questions, get them into the Q&A, and we can pose questions directly to any of the panelists, or if it's just a general comment, John and I can pick that up and put it into the discussion. So looking forward to a bit of a lively debate here, and by all means want the attendees to jump in as well. So Wendy, over to you first, please.
Hi, Wendy Sten, Forget Me Not Properties. So I have buy-to-let serviced accommodation and moving into commercial CMOs. And so got a bit of a mixture going on. I've been doing property officially for the last 5 years, but unofficially probably for about 25 years. Okay,
and before property, what did you do?
So I was a veterinary nurse and went into veterinary practice management, and had a passion for animals and still do. So want to make sure that landlords allow pets in their properties. So campaigning about that.
Okay, very good. There may be some would not quite share that passion, but that's
a lot don't, sadly.
Okay, and Antoine, brilliant you could join us today. Thank you.
Yeah, hi David, hi everyone, thanks for having me. So I'm an ex-investment banker, and now I'm a private investor. So I invest in other people's property projects, and I also run a community called the Investables, which is all about helping property developers raise investor finance from investors like myself.
Okay, and I think you had a bit of a rebrand from some of your other businesses and property there. Do you want to...
Yeah, we moved from quality investor backs into the Investables to reflect what we cover, what we talk about in the community.
Excellent. Okay, so everything channeled to the Investables.
That's right.
Excellent, fantastic. And Keith, over to you. Thanks for joining.
Yeah, thanks for having me, David. Yeah, I'm Keith. I'm still working, unfortunately, but making my way out of work. I'm an engineer. I've been a property investor landlord for about 10 years. I'm mainly involved with HMO. I have two myself and managing HMOs. And along the last 10 years, I've done some major refurbishments, the odd flip, things along those lines. But I've always been in property on a part-time basis.
Brilliant. Thanks very much. So we've sort of got Wendy, who's really primarily a developer. We've got Antoine, who's primarily just an investor into deals, and Keith has done a bit of both. So it's a really good mix. So John, do you want to kick it off by either framing the discussion, or have you any particular questions for any one of the panelists to kick it off?
Well, more of a general comment, and then in the sense of framing. So we can have people who actively directly invest. Keith has just highlighted being a HMO landlord, and that's hands-on, that's being responsible for the operation of an investment property, working with the tenants, that sort of thing. Then we have Antoine saying that he's a passive investor, which I'm going to interpret for this conversation as someone who's more hands-off, that he's essentially investing in someone else who's investing in a property. So it's indirect. It's not directly responsible for the management. And then Wendy, and she's has a mix of things, but in particular here, she represents essentially the people who are taking a property and converting it or doing something to it to add value. So the development side of that. So I think, David, you wanted this to be framed as passive investing where someone else is in charge versus active development where you're adding value, not a buy and a hold, so to speak, but an investment in a project that has an end date, that has an exit. Is that fair?
Yes, and what motivates the decisions? Why do people decide to do what they want to do? Okay,
so Wendy, if you are out running a project and you decide that it makes sense, planning and development and all the rest, when you look for investors, what would represent an ideal investor to you?
I guess I'm looking for people that have got kind of similar interests, because I think the values are quite important in terms of who I work with. The investors that I'm looking for tend to want short-term investments. So they're maybe looking to make some money back within a year or 2 years. That tends to be kind of what we're looking for. So people who've got maybe they might never have invested before. That seems to be kind of who I've been connecting with more recently, and they're interested in getting into property, but they don't want to do all the buying, the developing, and all the work that's involved. They just want to give me their money for a short period of time and then get it back with an interest payment. So it's working a bit harder than it would if it was sitting in the bank.
Okay. And Anton, sort of on the opposite side of that, given the way you introduce yourself. So you're one of those passive investors. So what do you look for when it comes to investing in someone else or someone else's project?
So I look at two things. I look at the deal, but initially I will look at the people behind the deal. So I'll be doing extensive due diligence on the people behind the deal. I think what Wendy just suggested, values is really important, and you can tell by the way people interact with you, by the way property developers respond to your questions and how forthcoming and transparent they are. So those are the two stages of the DD, I suppose, the people behind the deal first, and then moving on to the deal itself.
Keith, are you mostly on the active management side, or do you also invest passively in other people's deals?
I do invest passively in other people's deals. I've done that mainly because of the experience and the journey I've had so far. I think it's kind of like qualified me to recognize a good deal and all the other things that go behind the deal. It would be tradespeople, any uplift, planning. I've come in through experience, to be honest.
Okay, very good. So in my case, just to sort of add to the mix, I tend to invest passively these days through in other people's deals. You could call that being a bit lazy, as in I don't have to go out and hunt for the deal. I can sort of sit here with the keyboard and look at deals, and it's frankly easier than jumping in a car or whatever to go look at deals. It doesn't pay as well, which I think is perfect because it should pay the other person better than me. So they go and do the heavy lifting. They take the calls or hunt down the materials. From a regulatory FCA point of view, and there is a question in the Q&A I'll get to, there's this whole issue of how does a deal get presented and what are the rules and what are the regulations? So I like investing through a platform. It lets me diversify my investments across multiple deals and multiple people, and I can vary the level of commitment so I can test the waters. It also then provides a layer of FCA checks and balances in the sense that some FCA authorized person has signed off that the presentation makes sense. Not the deal's a good deal, but that the deal's even worth looking at. It's more that it's presented in a reasonable way. Now, the problem we have in the marketplace is people with deals chasing money and people with money looking for a way to invest. And then this whole minefield of there are regulations about this. But if we sort of sidestep the regulations for a minute, why would someone passively invest other than they're just old and lazy? Antoine, you don't look old and lazy, and you passively invest.
I have no interest in doing my own deals. I'm not interested in owning properties. I don't want to be hands-on at all. And just the fact that even if I own a property and I outsource the management of it, just the fact that I may have to get involved at one point and find a new agent, or have to deal with the agents, or have to deal with the tenants or anything like that is I have no interest in doing that. And to an extent, I don't know how to do my own deals. I wouldn't know how to do my own deals, but that's fine. It's not my skill set. And I invest in other people because I want to leverage their skills and experience to do that. My skill is in assessing other people.
Cool. And I think that's a really good point, that you've decided to invest in a certain way that complements your skills and your interests and whatever other reasons you have for wanting to focus that way. But it comes down to making the most of what you have and investing in other people and letting them bring forward their skills. So Keith, you said you run some HMOs, right?
Yeah.
So go ahead.
Yeah. So sorry. Basically, when I've been working, all the jobs I've had have been customer facing. So I think I transported some of that experience into HMO, because obviously as a HMO landlord, I need to deal with tenants. I need to be able to see who they are, where they're coming from, you know, can they mix in the house? And I think I've also then added those qualities to finding investments or people to invest in, because as has been said so far, it is a people's business. So when I do look at the person first, you know, can I communicate with them? Can I trust them? Are they reliable? You know, have they got the experience and background? Are they going to be honest, truthful? All those basic needs. And I do that with everybody, because I find that's the best indicator of the person.
It's interesting sub theme here. Wendy touched on it too. So we're all sort of saying it's about people evaluation. It's about evaluating the skills people have and whether they're talking a good game, but can they actually deliver? Some people believe they're better at things than they are. Other people understate how good they are, and you almost have to fight them to find out what they're good at. As Keith has highlighted with HMO, there's a set of skills to running an HMO that is different than running just a single let. And I don't really have those skills. So if I was looking at an HMO investment, do I really want to skill up? Do I really want to figure this out? Or do I just want to back someone else who already knows how to do it? So Wendy, coming back around to this idea that you're looking for investors. So how do you deal with the regulations and sort of do the tap dance so that you're compliant when you're speaking with investors?
Well, that's something I've been learning about with you guys over the last 6 months in terms of how it's being done properly. But we generally have an agreement that was drawn up by a solicitor and potentially offers security over the projects if that's what the investors want. So it's been most of it's been family and friends that have been involved as investors. And so in terms of the relationship, we've already known them kind of quite well. So I think, you know, it was a bit of an eye-opener learning about the regulations and the impact they could have, and, you know, hence coming to work with you guys on the platform to make sure that we are being legal about how we do things. Yeah. But in terms of the kind of, you know, passive versus the developing side, for me, it's a journey. So I started learning about property and how to make money from property, and then I did it. And now I've learned that actually that some of the investors that have put money into our projects are getting a fantastic interest rate, and actually potentially better than the yield I'll get year on year. So I'm thinking, well, actually, maybe my money would be better invested in other people's projects too. And that's kind of led me, I feel, kind of to the next step where I'm now starting to invest in projects. So, and I suppose it's like any journey, isn't it? You can start somewhere and kind of move up, or you can realize it sooner, like Antoine probably did, and start investing sooner. So yeah, it's been a journey.
If I just jump in there on that, Wendy, I'm sort of curious, some of the points that Antoine made about like not wanting to be hands-on, not wanting to have the hassle of maybe having to change management agent or chasing, you know, a tenant for rent and repairs. You're obviously motivated or excited or enthusiastic about actually doing those sort of things, getting into the deal, meeting people, getting senior debt in place, meeting builders, dealing with all those problems. You know, so is that just a mindset thing? Everyone's got different aspirations and things, but to be a developer, you sure you have to embrace what a lot of people just couldn't be bothered doing.
Yeah, absolutely. And for me, it's about having a good team around you to outsource and help deal with all of those things. So, you know, as a business owner, your job is to create systems that manage and operate these things. And my job is to go out and find the deals and raise the money. So, you know, that's the bit that lights me up. The management side of it, not so much. And that's why we outsource that to great people to do that. And I think it's about having a mixture as well. You know, we'll always have a portfolio because that's our kind of long-term passive income. But now I'm excited about investing in other people's projects to bring in some short-term passive income as well.
Yeah, yeah.
There's
also I'll just make one quick comment, John, before I go back to you. It's also probably about people's view on time in terms of where they're wanting to get in life. So Brendan and I actually managed 70 private properties for landlords back in about early 2000. That was a great learning experience. but the thought of going back to manage properties for other people now would just be like the worst thing in the world. Just no interest whatsoever. And even for years, for our own portfolio, I was like, I'm not going to pay a management agent 10, 11% to manage my properties. I'll manage them. I'm going to save that money. And it took me far too long to realize that actually that is a terrible use of time to be running around, sorting out a blocked toilet or running around with a blocked drain just to try and save a little bit off management agent. So there is probably, as you say, a journey people go on, and you soon learn to outsource what you can outsource and be very precious with your time. And I'm guessing that's what drives, Antoine, someone like yourself, and then Keith, what you're doing now, that sort of time appreciation means find a deal, invest in it and forget about it, as opposed to find a deal and be consumed by it until it's finished.
Yes, if I can just add, investing on a hands-off basis is a lifestyle choice as well. I'm not after a full-time job. I'm happy to do the due diligence work at the start on the people behind the deal, on the project. So I'm happy to work a lot at the start because I hope that I'm going to be able to work a lot less later on as the project progresses. It may not be the case if the project doesn't go well and I need to somehow, do something or get involved or, take legal action or whatever may happen during the life of a project. But that's the idea at the start.
Brilliant. John, I think there's some questions there. Do you want to?
Yeah, there are. There's definitely one that's more of a comment, and it's saying that you can leverage the skills of others and essentially trying to master a bunch of things yourself versus realizing what you're strong at and then backing others who can do the things that you really want to fund or you want to see done. And whether that's hiring a manager or whether that's actually investing with someone else. And Warren Buffett has a comment that if you are going to be in the rowboat, it doesn't matter how hard you row. It matters that you're pointing in the right direction. Essentially, that you're going where you want to go is more important than how hard you sweated or how many toilets you unblocked and that sort of thing. And David highlighted this, and so does the comment, that you need to really understand what you're good at and what you don't want to be doing or what you're not good at, and then partner up with others. This is a people business, and that's probably something that as a newer person to the sector, people don't realize how much it's a people business rather than they think it's about the numbers in the finance. Now, there are quite a few comments on the whole raising money and the compliance. So in the same way that Anton, myself, some others are thinking about, we would rather back others than do it ourselves. So you're outsourcing the property finding or the property developing. Maybe you're backing Wendy in her next project or Keith with AHMO. I would say you should outsource the compliance. I don't think there's any profit in compliance. I think it's a lot of work. I think it's a minefield. You can get arrested. You can have fines. You can have unlimited liability if you get this wrong. And frankly, the element that is regulated, the element that is compliance centric, is a part of a bigger project. Why take on that part full time? Why not outsource it on a pay-as-you-go basis? And that's where you can use equity or debt crowdfunding. You can pay FCA advisors. It's slightly more expensive. You can pay investment banks. It's really expensive. But do not be in the business of compliance. You're in the business of property. So high net worth and sophisticated exemptions no longer the metric that you should be focused on. That's not going to keep you safe. Even if you're only dealing with those people, you could still be breaking the regulations. And if you don't understand that, that just says to me you're a candidate for outsourcing the regulations and outsourcing the compliance. So if there are other questions on compliance, let me know. But I think I just did a bit of a sweeping statement that covers a number of them. So coming back to what people see on the horizon. So Wendy, we'll start with you because you're more active on the finding deals. What do you see in the marketplace right now? Where are the opportunities? What are the things that people want to back?
I think the kind of smaller the buy-to-let market's changing because of the tax regulations and finding these below market deals. There's a lot of people trying to fish in that pond, if you like. So we're more interested in potentially commercial buildings that might convert into residential. We're primarily interested in holiday accommodation. So we're looking at, where we might find these that would make suitable holiday rentals. And we're also looking for properties that could be rented to charities potentially for local authority housing, those types of things. So there's a number of different areas where there are opportunities at the moment. And I think with the housing shortage, definitely finding properties and converting them and selling them on to charities or renting them to charities is a good space right now. The holiday market with kind of smaller holiday properties is more challenging because the regulations changing in Scotland, certainly just now. So looking for bigger holiday properties or holiday accommodation in hotels, so apart hotels, those types of things becoming more self-service, I think are probably good opportunities at the moment as well.
Yeah, your focus is Scotland, right?
Yeah.
Very good. Okay. And Keith, you're sort of straddling the two. You have your own investments and you're starting to do more passive investing. What are you seeing in the market, or what are you noticing that's changing in the market?
I see the market presently as being quite exciting. I mean, obviously everything's bubbling over. I've seen even in my HMOs, I've just put an advert out and the response has been the best ever. It's just gone off, the dial on the scale's gone off the scale with the amount of, responses, and it's made my job a lot easier. Unfortunately, I've been able to put the rent up. So I see the HMO market as being quite very, very positive. Myself, I'm looking more for probably, because I'm getting older as well, I'm looking at more income producing assets or opportunities. But I think it's quite fruitful out there. And obviously I'm looking at yourselves, crowdfunding, to allow me to increase the passive side of any investments I do.
Okay. And I just want to tie into a point you just made. You're getting older. So I think property investors have to remember life events matter to how our strategies work, and buyers and sellers normally buy and sell because of life events, not because of market timing. And as you get to certain ages, you look for different things than you look for when you were a young whippersnapper. And then, Anton also highlighted that he's investing in a way that he does because it's a lifestyle choice. So Anton, as someone who's probably the most removed from the direct market because you're indirect through others, what do you see, what's flowing through, what information's coming to you about the investment opportunities?
So I have a very short to medium-term view of the market. I have no interest in the long-term prospects when it comes to the market, because my concern is finding deals and assessing whether these deals can get me my money back within the expected and agreed time frame. So I'm not looking at the long term, and in the short or medium term, I mean, there are deals to be had pretty much everywhere as long as they stacked properly and the people running them know what they're doing. So yeah, there are no changes. Whether there's a recession, an economic downturn, or anything, it's just about stress testing the numbers a bit more to see whether the deal still stacks and it makes sense for me to invest in it.
I like something that you just said there, Antoine, and David, I'll let you deal with the last question in the Q&A. Antoine was saying he assessed whether he's going to get his money back. That's front and center. That's sort of top of the list. And a lot of property people that have deals focus on the profit, the potential, the money they're going to make. But the cash investors like, no, I don't care about that until I believe that I'm going to get my money back first. Then I worry about what I'm going to make. So you do have to, if you're going to raise money from other people, you're going to have to really get in the head. And Anton just highlighted something that's very important, that are you credible? Will you get me my money back? Then we can have a conversation.
But let's be clear, I want everyone to make money as well, right? It's got to be a win-win for everybody. It's not just about getting my money back. It's everybody getting a good deal out of the whole thing.
Yeah. Oh yeah, no, I understand. But if it doesn't seem credible that I can earn my money back, I don't care what the projected returns are. So
absolutely.
Okay, that's a good place to end that discussion. So everybody should make money, which is exactly what sort of growing wealth, whatever strategy people choose, if it's to get involved directly and be the project manager and buy the property and own the property, or it's investing passively hands off, The aim is still the same. It's about growing wealth, which is key. So the last question that popped in there before we wrap up the broadcast today, how best do we seek a company to manage the compliance of raising funds? How do we know they're good at what they do? So I can assure you this is not a plant question. So I don't owe the asker £100 or anything for asking this, but yeah, this is what we do. Leo Crowdfunding is a equity property crowdfunding platform, and we can effectively provide that compliance umbrella. There are other companies out there which you're happy to look up on the internet. We do equity. So if the question is regarding perhaps debt, then there are peer-to-peer platforms. So that is the probably the best way and most cost-effective way of solving the compliance problem is outsource it to a crowdfunding company. I think that's the best place to start. And how good are they? I would say go on platforms, engage with them, get a Zoom call with the key people in the company, have a look at the deals they've done. Testimonials are always key. Speak to developers who have raised funds, speak to investors who have invested in the platform, and then make your judgment call from there. I think is the best way of answering that. So listen, can I thank Wendy, Antoine, and Keith for joining? Really, really useful. I suppose I have to ask the question, Antoine, has anything said today convinced you to get away from passive investing and buy your own property and get involved hands-on?
No, nothing. And I think
nothing there. And Wendy, you're not going to all of a sudden decide passive investing only. Take me out of the day-to-day of property.
No, I think I would miss the doing a little bit too much.
Very good, very good. And Keith, you're going to just keep doing a bit of both. You're the best of both worlds.
Well, I'm an engineer. I like being practical and physical with things. So I think that element will always be there. But as said earlier, as you get older, you want to be more hands off. So this is an ideal opportunity.
Brilliant. Fantastic. I mean, this is what makes the world it is, John. I mean, if we all wanted to be investors and no one wanted to be developers, there wouldn't be a business.
That's right. That's right. And we also pass through different stages and different sort of perspectives.
Yeah, absolutely. Fantastic. So, okay, two things. The first thing is of a bit of a special offer I'm going to throw out here today. So, as you know, Leo Crowdfunding sponsor the Canary Connections networking events. They're usually held every quarter. Barry Ray is the guy behind that, who I know many of you know, who are regular attendees. He puts on these brilliant events in London. They're quite unique because the sponsors and the key people involved don't actually get a chance to present who they are. So it's not a sales pitch or an ego trip by a speaker. It's pure networking. You come along, you get the attendee list so you can identify who you might want to speak to. And these have been very, very successful in London. And Barry's reached out to start this in Manchester. The first one is next Thursday. Leo Crowdfunding has chosen to sponsor that. And Barry has very kindly put up a free ticket. So it's almost sold out. I think he's down to the last couple of tickets. And he has very kindly, I think he's actually on here today as an attendee, put up a free ticket. So the first person that contacts me who wants to attend this networking event, the inaugural Canary Connections networking event in Manchester next week, if you get in touch with me on my phone or by email, first person that does that gets a free ticket. So there you are. So thanks, Barry, for that. And we're now going to take a break for a few weeks in August regarding the broadcast. We've got some staff on holidays, and a number of people do head off with the kids off school, etc. So we're going to just take a wee break so people can have their Thursday morning to themselves for a week or two. And then we'll come back. And I'm guessing, John, probably the first topic when we come back will probably be the policy statement from the FCA. I think it'd be good to maybe deep dive into that. Perhaps get on maybe someone who's, I'm thinking of an FCA ex-lawyer in my head right now. We'll see, is he available? And we'll maybe see something like that, or some legal people, get them on to have a look at deep dive in that and try and provide benefit to the attendees. So is there any other questions, John, that popped in that they needed to comment on, or is everything fine on the question front?
No, we're good on the questions, and I think giving them a month to prepare would be fine. They can actually read the document and come back with some salient points.
Are you suggesting we give them all homework and then we'll test them and they come back?
I meant our speaker is going to share if you get the person you're targeting. So.
Oh yeah, he needs time as well. Yeah, we should give the homework as well for people to read it themselves. So that's fine. Listen, delighted again for our guests. Thank you very much to Wendy, Keith, and Antoine for joining. I hope you enjoyed that.
Yes, it's been brilliant.
It's been great. Thank you.
Absolutely.
Fantastic. And that is us. So there's a quick snap of contact details if you want to grab that free ticket in Manchester to the inaugural networking event. It's going 3, 2, 1 and gone, and we will end the webinar, and look forward to seeing you all in September. Talk to you all soon. Stay safe. Bye-bye.
Bye.